Hi, welcome to the market view for Monday the 17th of February 2014. And just to remind you, if you didn't receive an email from me yesterday for Sunday the 16th of February, I did send out a quick note telling you about a video that I put together going through the full detail of Friday's 80-point trade and how I managed to stay in it for the duration of the trading session, which is actually just over 12 hours. Okay, let's continue on from Friday's activity. We saw the market break out of the 169. I'll start again. The 166 resistance here, and then trade up to the 167 area where we did have some major resistance. And as I said in the overview on Friday, or the market view as it's called, the 167 area was a major resistance, but if we could drive through this, then we would continue higher. Well, the market drove up to the 167.50 area just before the close, which we'll see on the video that I recorded yesterday when the market actually did this. However, we can see already on the overnight the market's traded higher here, and we already got a high of 168.21. So the market's had to go through the 168 level, and it's headed towards the 150 area, but is so far struggling with this. So you can just see that there. This is the 168.50 area. So in order to move higher, the market needs to drive through here. But there's something we must take note of before getting excited about the market continuing to move higher. And that is, from the bottom here, we've had 1, 2, 3, 4, 5, 6, 7 consecutive days of the market moving higher. Now the market's due for some profit taking, there's no doubts about that. How far the market moves lower is another thing, but certainly after 7 straight days of being up, it is due for some type of profit taking, whether it's 1 red bar or whether it's 2. But what's crucial now is the market pulling back to the 167 area. If it pulls back to this area here, the 167 area, then we've got to look for support, because as we saw in Friday's market view, this is a major area of resistance where the market has moved sharply lower on each occasion that the market has actually reached this level. So that's the first thing to keep in mind. If you get any potential shorts today, 167 is likely to be the floor and the profit target for any potential short. The trend is to the upside. It's strong in this direction, as I also spoke of yesterday in the market view. We are seeing, and I think there's some backdoor QE about to come into the market, irrespective of what Yellen says, because gold and silver have also taken off. And we've had this since 2009 in many sort of disguises, and it's a case of that they'll not be able to, in my opinion, the funding will have to continue indefinitely, because the market is so used to it, like a drug addict to heroin now. Even though they've had the bit of tapering, and we saw what that did when they started to take that off in January. The Dow dropped somewhere in the region of about 700 points in a matter of a couple of weeks. So it's about keeping the helium balloon alive, i.e. the funny money in the markets with the Dow and all the rest of it. So they're going to have to keep pumping in some way, in some sort of, let's say, disguised as some other sort of stimulus package, but effectively QE. And this is why we're seeing this move in this market, and more so in the silver and the gold market as well, which has been depressed since September. I think it was September 11 or 12. It'd be September 12 when silver hit $50 and gold was at $1,900. So they've broken out now, so it'll be interesting to see how the rest of the market reacts. And this is something we've been waiting for a long time, to get the markets moving again, get some decent point ranges each day so that we can take advantage of the 80-point moves as opposed to 20 at the minimum. So let's just have a quick look at the 30 minutes, see what's happening on the overnight. This trade, I say, there's a video devoted to this. It's only 10 minutes, but talks about how using the pivots and the psychological areas, and throw in a couple of moving averages and extensions. You could actually hold that trade all the way through the whole day, and you can see there the market hitting the 167.50 area before the close. It was out just a bit sooner than this, but like I say, have a look at the video. So the market opened higher on Sunday night there, and then came back down to the close of Friday, just below the 167.50 area, and then drove through, again through the this will be the 168 area, and then we've been up as high as 161.20, 68.21, and the market has now pulled back, and we've got some selling here. It's slightly faded, but you can see there that the market shot up, followed by a second green candle, and then the volume in this bar is greater than the previous bar, and the range is less. It's come off the highs and it's red, so there is some selling around, and the market's worked its way down. We see the selling disappear, which must indicate that it was profit taking more so than selling, as the market's found support at the resistance 1 there. The market's been tested at the moment. Prices were thrust down during the last 30 minutes and have come off the lows, trading back up to the resistance 1, and it will be interesting to see how this pans out after the completion of this bar. So we're back at the 168, just under the 168 level there, 167.81. So a close back above 168 will take it to the long side. And also something else that you want to keep in mind as well, just to see the strength that's in this market, because we know from the daily chart that there is a chance that we could get some profit taking in this market. You can't keep just going up and up and up every day for the rest of the year, because that's not just going to happen. That's not how the markets work. There's going to be some profit taking. So to summarize then, the market's got to close back above the R1. We can see the volumes increasing here, so there is some sort of testing going on. If we just drill down into a smaller time frame, we can see here in the 5 minute that the market has gone below the R1, and again we can see a bit of buying coming back in here in support, but the market tries to make its way back above that R1 level. So there's the volume. It's shake everybody out to the downside and then try and bring the market back. That's actually going on there at the moment. So that's it for today. Just keep it brief, and I'll report in during the day if there's anything to report in. Hopefully that's given you an indication of what may happen during today's trading session. As ever, thank you for your support, very much appreciated. If you don't subscribe to the YouTube channel, by the way, then think about doing so. If you want to find it, you can get it from the TUFXP site. There's a link that takes you direct there, but if you just go straight to YouTube and don't want to log into the member section, just type in TUFXP Next Gen at the in the search box for on the YouTube channel, and then make sure you subscribe to it as well, and then you'll be notified via email of any updates that get added to the site as well. And also you'll be able to see all of the videos as well. If you come down to here, 68 videos, and then they'll all be listed inside of the channel there. Plus there's over 80 actually, but it just shows 68 in the current video, because it has these other, but only displays so many, and then click load more to see more of the videos. Okay, so that takes care of that. Also keep in mind the special offers that are available at the moment with the live trading accounts with GKFX, the £300 rebate there, and the doubling of the initial capital up to, I think, about 5,000 with ETX, but do check the small print for details or give them a call. Okay, that's it. I will see you in tomorrow's market review, if not throughout the day. Have a great day. As ever, thank you for your support. Very much appreciated. Until the next time, thanks for watching.